Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a fantastic weekend. Last week was a big week in the markets. We had multiple interest rate decisions last week and a lot went on, which is going to set the stage for the coming weeks in Forex markets. So as always, starting with a quick look at the economic calendar for last week, because we had some really important events taking place. We had FOMC and we had the quote-unquote unexpected rate rise of 0.75% when 0.5% was the anticipated rate hike. I say quote-unquote because they did, by all accounts, leak the 0.75 interest rate decision hike in the Wall Street Journal beforehand. So it wasn't a total surprise, but compared to what was previously expected, it was a surprise hike. We also had the SNB, and for the first time in a long time, and this was more of a surprise hike, we saw interest rates rising by 50 basis points from minus 0.75 to minus 0.25. This is quite a big moment because up until now, the SNB policy has been of devaluation of the Swiss franc, and it's made Swiss franc long positions a little bit less attractive because you don't really want to be fighting the SNB if they're trying to devalue the Swiss franc. However, with this latest rate hike out of the SNB, this actually puts Swiss franc long positions clearly back on the table, and Swiss franc long positions this week are definitely something we're going to be looking at. And we also had an interest rate rise out of the UK, but it was just simply the expected 25 basis points. And last but not least, in terms of interest rate decisions last week, we had the BOJ, and they continued their policy, did not see any rate rises, and they are, as previously discussed in this scenario, where they are defending the 0.25% bond yield on the 10-year government bond, and in order to do this, they are devaluing or printing money to buy those bonds. And so we still have ultra loose monetary policy conditions in Japan. And so jumping ahead to this week, we do have a US bank holiday on Monday, but apart from that, we do have pretty much a clear calendar, and that's because all of the big interest rate decisions took place last week. And as I said at the beginning of the video, that kind of sets the stage for moves now in the Forex markets. And we do have to pay attention to some CPI data out of Canada. We have some CPI data out of the UK. But again, this is nothing we really need to plan too much around. Those interest rate decisions are now out of the way. They're in the rearview mirror, and it's going to allow us a clear run at the markets for a few weeks now. Okay, so let's have a look at the scorecards for the coming week. And there's quite a lot here that we need to pay attention to, because last week, the first thing to note is the Australian dollar has reduced its score from 3 to 0 with net change of -3. And we also have the Canadian dollar going to 0 from a score of +2. Now, why is this significant? Because this is a warning sign that the markets are transitioning from stagflation to deflation. And if that's the case, the risk of capitulation of panic selling in the stock market as we go into deflation is going to increase. And if there is an increased risk of capitulation or panic selling in stocks over the next few months, say, or at least in the near future, there is a risk in that scenario of a flight to safety. And in that situation where you get a flight to safety because of panic selling in the stock market, you will see the US dollar benefit, you will see the Swiss franc benefit, and historically you will see the Japanese yen benefit. Now, if that's the case, and why that is the first thing we have to note, that the overall macro picture may be changing from stagflation to deflation, it makes the US dollar and Swiss franc long plays next week certainly attractive, because if there's a flight to safety and you are long those currencies, your profits and your position will accelerate, and you will be on the right side of a flight to safety, and you will actually have the wind in your sails if there's a flight to safety. But conversely to that, if we are to go short the Japanese yen and there is a risk-off move which takes place and the Japanese strengthens, we'll be on the wrong side of that. So the first thing to note is the warning sign here of stagflation finally giving way to deflation. And if that's the case, it means that although the Japanese yen is very weak, I personally am not a huge fan of yen short positions in case we get that flight to safety or we get some capitulation in the stock market. We're going to be ending up on the wrong side of those trades. So the first thing here is the US dollar and Swiss franc long positions are my preferred plays and my main plan for next week. We will look at the Japanese yen pairs, but they're not going to be highlighted as my favorite because of reasons just discussed. But we are also going to be paying attention to the commodity currencies down here primarily, the New Zealand dollar, the Aussie dollar, the Canadian dollar, vis-a-vis the US dollar first and foremost, and also the Swiss franc. Okay, so let's have a look at the individual currencies before moving on to the markets themselves. On the daily chart here, as always, just to get an overall picture of what's happening in the individual currencies, you can see the DXY is still in an uptrend and we are now making new highs. We are above the 102.992, which is the major 7-year breakout, which I've highlighted in previous videos. And we stopped just shy of the 106.08. So any continued pullback in the DXY, maybe we even retest this and then continue up, is going to be viewed as an opportunity to look for long positions. And going into next week, the DXY is my favorite currency to the long side. Next is the euro. Really just inversely to what we looked at here, you can see we are back below the major breakout level of the 1.06710 highlighted in previous videos. And again, it looks like we're just coming back to retest this. So any continued pullback in this market is viewed as an opportunity to look for shorts into the 1.0296. Next is the pound. We came down, took out the target at the 1.2081 and bounced last week. Despite the raising of interest rates last week, the Bank of England is actually being fairly conservative with their rate hikes, only getting 0.25 basis points from them last week. I am still bearish on the pound overall, so any continued pullback is viewed as an opportunity to look for shorts into the 1.1734. But as we saw in the scorecards, the euro and the pound, relatively speaking, are actually gaining a little bit of strength just because those commodity currencies are now starting to underperform. But don't confuse that with being bullish on the pound and the euro, because overall I am still bearish. Next is the Swiss franc. Now the Swiss franc is technically still in a downtrend. However, when we look at the 1 month forward-looking scorecards and we factor in the new data, a number of pieces of data actually caused the increase in the Swiss franc. But of course, one of the primary pieces of data was that unexpected rate hike. So yes, the Swiss franc is currently bearish, but relatively speaking, this is going to be one of the better currencies to be long, especially vis-a-vis the commodity currencies, which we're going to be looking at down here. And going into next week, I wouldn't be surprised to see this reversing and continuing to the upside. Because don't forget, what we're looking at here in terms of the technicals is what has already happened or is happening now. But the scorecards are projecting 1 month out. Next is the Japanese yen. The Japanese yen came very close to its target at the 0.0074180. We are still below the major breakout level of the 0.007945. In normal times, this would be an extremely good short opportunity. The problem is, if we are coming to the point of an increased risk of capitulation or panic selling in the stock market, as I say, we go short the yen and this thing can rip higher on a flight to safety. So normally, yes, this would be one of my favorite shorts and we would absolutely be treating US dollar yen to the upside as probably the best pair, franc yen to the upside as the second best pair. But because of the reasons discussed and the risk of a flight to safety with panic selling in the stock market, we have to take that into account. And so yen shorts, we will look at them. I'll have a look at these, but they are not my preferred play because we run that risk of standing in the way of a flight to safety. Next is the Canadian dollar. Now, we're not looking at the commodity scorecards in today's video. However, I can tell you that over the last couple of days, the commodity scorecard shows crude oil decreasing its score. And that is another major flag that we are transitioning from stagflation to deflation. The Canadian dollar sold off quite hard last week, and this is going to be one of my favorite shorts heading into next week. Any continued pullback in this market is viewed as an opportunity to look for further declines into the 0.7574. Next is the Australian dollar. We had a big sell-off last week, and again, Aussie shorts, along with the other two commodity currencies here, are my favorite shorts. And if you are short commodity currencies and you get a flight to safety, you will be on the right side of those trades. So any pullback here in the Aussie is simply viewed as an opportunity to look further declines into the 0.6685. And last but not least, we have the New Zealand dollar. Same as the other commodity currencies, I like this for shorts going into this week. And if you get a flight to safety, you'll be on the right side of those big moves. Any continued pullback in this market is viewed as an opportunity to look for shorts into the 0.61590. Okay, so let's look at the markets themselves, starting with crude oil. This is the first time in a long time you would have seen me being bearish on crude oil. I'm not outright bearish because we are kind of still near the top of a major move in crude oil. However, based on the technicals here, we do have a double top reversal, plus we have crude oil weakening in the commodity scorecards. My overall bias is to the downside. And again, this to me is a red flag that we are likely transitioning from stagflation to deflation. So any pullback in crude oil is viewed as an opportunity to look for shorts into the 103.84. However, going into next week, although I would be interested in potential crude oil shorts, I primarily am using this to provide a bias for the Canadian dollar pairs. So if we do get a nice setup here, I may be looking to take crude oil shorts next week, but certainly the fact that we are now turning bearish in crude oil makes me favor Canadian dollar short positions next week. So the first market we're going to look at here is Aussie dollar. Aussie dollar has started to pull back, and this is my favorite market going into next week. Any continued pullback in Aussie dollar is simply viewed as an opportunity to look for shorts into the 0.6812. And heading into next week, another thing from the commodity scorecards is iron ore is reducing its score as well. And this is suggestive, and in fact is one of the inputs into the Forex scorecards of the Australian dollar continuing to decline heading into next week. Next is US dollar CAD. Now this is a market that has not been in the weekly Forex forecast for quite a while. And the reason is because we had a stagflationary scenario, and in that scenario you tend to see US dollar CAD kind of just chopping sideways. However, for the first time, the scorecard has thrown this market back into the mix, and this is another sign of that stagflationary scenario giving way to deflation. Any continued pullback in this market is going to be viewed as an opportunity to look for long positions up towards the next key of resistance to the upside and the target set, the 1.3203. And this is one of my main pairs I'm going to be keeping my eye on, looking for bullish opportunities next week. Next is New Zealand dollar. We've already started to correct. You can see we are forming this bear flag type pattern with quite a deep correction here. Any continued pullback in New Zealand dollar is simply viewed as an opportunity to look for shorts into the 0.6158. Next is pound dollar. We took out the target set last week, and going into this week, I am still bearish on pound dollar. We have a big pullback here. This is simply viewed as a deep correction. The deeper the better, gives us a better shorting opportunity, more reward or more distance towards the target. So any continued pullback is viewed as an opportunity to look for shorts once again in this market, down towards the next key of support to the downside at the 1.1715. The only reason the pound and euro dollar shorts are not highlighting gold is, as I said, I really do prefer the commodity currencies versus the safe haven assets as the primary play next week. Next is euro dollar. Euro dollar is below the major breakout level here, highlighting previous videos at the 1.06359, which gives it a bearish bias, and it's also still in a downtrend. So any pullback in this market is viewed as an opportunity still to look for short positions into the 1.0341. And the final dollar pair we're looking at here is US dollar Japanese yen. We did come and take out the target, and that was almost the move last week to the pip in this market. Going into this week, I am overall bullish on this market. Any pullback is viewed as an opportunity to look for long positions into the 140.29. Now, a caveat to this is that I am very unlikely to trade this market next week. Why? Because the US dollar Japanese yen pair to the upside is a risk on move. Even though they're both risk off currencies, the Japanese yen is more of a risk off currency. And so in a flight to safety, you do actually see the US dollar selling off against the Japanese yen. So it goes back to what we discussed earlier. I don't want to be standing in the way of a flight to safety, because I do think the risk of panic selling or capitulation in the stock market has greatly increased now. So why would I go long US dollar Japanese yen when I could go short Aussie dollar, I could go long US dollar CAD, I could go short New Zealand dollar, and if there's a flight to safety, these markets will explode in that direction, unlike this market, which could actually leave me on the wrong side. So we are looking at this. I am doing the analysis here, but I'm almost certainly not going to trade this. Next is Franc yen. Really strong momentum to the upside because we have a very weak yen, and we had that unexpected rate rise last week from the S&B. Any pullback in this market is viewed as an opportunity to look for longs into the 140.59 and then onto the 144.18. But you have the same problem here as with the US dollar Japanese yen. In a flight to safety, you will likely see the Swiss franc declining vis-a-vis the Japanese yen, because the Japanese yen has historically always been the most risk-off currency. And the final yen pair we're looking at here is euro yen. It does look to me like we are going to continue in this market, perhaps, and make one final high, at least up to the 144.21. So again, if you really want to trade those pairs, I would be looking to trade these to the upside. But again, in a risk-off move or a flight to safety, you would see the euro crashing against the yen. So for that reason, yes, we're looking at these markets, but you can see these are not my favorite or preferred markets I'm going to be focused on next week. Moving on to the Franc pairs, starting with Aussie Frank. This is a really nice market. We had a strong sell-off. I would be expecting a correction to come in as some profit taking comes in first. Any correction in this market is viewed as an opportunity to look for bearish reversals down to the 0.6662. Next is CAD Franc, another really interesting market heading into next week with crude oil rolling over and the Swiss franc actually catching a bid from the unexpected rate hike. Really big sell-off because of those two things last week. So any pullback, I am going to be looking for further declines in this market down to the 0.7364. And this is one of my favorite markets going into next week. Next, we have New Zealand franc. Again, commodity currency vis-a-vis the risk-off currency of the Swiss franc. Any continued pullback in this market is viewed as an opportunity to look for shorts into the 0.6074. If we break through here, because we're very close to the target, so perhaps we take this target out first and then bounce, in that scenario, I'm going to be looking down towards the next gear of support at 0.5953. So that's my final favorite market heading into next week. You can see highlighted in gold are my 6 main preferred plays, which I'm going to personally be looking at trading next week. Next is pound franc, not highlighted in gold because I prefer the commodity currencies, but this is a market which I think in all probabilities we come down further. So any pullback in this market is going to be viewed next week as a selling opportunity down to the 1.1731. And the final Forex pair here is Eurofrank. Big sell-off to the downside because of the unexpected rate hike out of the S&B. We're very close to the target, so any pullback in this area is going to be viewed as an opportunity to look for bearish reversals into the 1.0092. If we come down and we take this out first and then bounce, I'm going to be looking down towards target 2 at the 0.9978. Okay, so wrapping up the video with gold, silver, and Bitcoin. Starting with the gold-silver ratio, you can see that the gold-silver ratio is overall still bullish. So I favor silver short positions because we have a strong dollar. So if we are going to go short gold or go short silver, I prefer still, as I have done previously, silver short positions over gold short positions. However, I am bearish on both gold and silver. So starting with gold, we've already started to pull back, and as it currently stands, this pullback here is being treated as a potential right shoulder, and any continued pullback is viewed as an opportunity to look for bearish reversals since we have the dollar outperforming with a score of +3. And any further declines, I'm going to be looking down towards the 1789.28. Next is silver. Silver has actually been very corrective, and in fact, we've been breaking below, and now we're back above the 2145, which is the major breakout level in silver. I am looking for further declines, and especially if we can break back below here once again like this with momentum, and we start to break out of this correction, any pullback is viewed as an opportunity to look for shorts once again into the 20.51. And last but not least, we have Bitcoin. Bitcoin was a fantastic short last week. This was a market I highlighted in gold last week as one of the best markets. And I did point out both on Twitter and in last week's YouTube video that we are at risk, and we were up in this area, we are at risk of a capitulation, a big sell-off in Bitcoin, similar to what we saw up here, and that is exactly what we got last week. We took out the target at 24,300, and we've broken down here. So going into this week, I do favor Bitcoin shorts once again as one of my favorite plays. Any pullback in this market is going to be viewed as another opportunity to look for short positions into the 16,492. So that is it for me for this week, guys. Again, very important message. I do think we could be approaching panic selling or capitulation in the stock market in the near future, and this will benefit the Swiss franc, the US dollar, and the Japanese yen. And that is one of my main reasons why I'm not a massive fan of yen shorts, but I do primarily also favor dollar long positions and franc positions because of that. So keep that in mind. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.